Refinancing is a great way to access the built-up equity in your home. With the elevated interest rate environment we are currently experiencing, refinancing your low-rate mortgage might not be the best idea right now. Luckily, there is another option to explore. Hello everyone, it's Rasha Ingratta, licensed mortgage agent here in Windsor, Ontario since 1999. Before we jump into this video, I'd like to ask for a moment if you can like, subscribe, and share this video with a family member or friend who can use this video, and to help me to continue to grow my channel. In this video, I'm going to be explaining how you can keep your low rate mortgage, but still be able to access the built up equity in your home. Many people have been faced with the challenges that come with higher interest rates. If you already hold a mortgage on a home or a rental property and are thinking of refinancing, but were deterred by the potential increase to your already low mortgage rate, or even getting charged a prepayment penalty, a second mortgage could be the answer for you. Since interest rates increase so quickly, anyone looking to refinance their mortgage would be subject to the new and current market rates. If you were able to take advantage of the low historic interest rates we saw during the pandemic, you could be looking at a rate today of nearly double of what we just saw a short time ago. A second mortgage may be an option. A second position mortgage option will allow you to keep your first pre-existing mortgage intact while placing an additional mortgage lien on your home behind it. Often, these second mortgage liens are usually obtained by your current mortgage holder or a secondary source like an alternative or private lending. The main goal is to keep the bulk of your mortgage in the lower interest portion. That way, the new funds that are required are lent out at the new higher rate. The alternative in a full refinance would be both old and new funds combined and being lent out collectively at the new higher rate. As I mentioned, another benefit to seeking out a second mortgage is that you won't be forced to pay a prepayment penalty since the original mortgage is left as is. With the most recent movement in interest rates, it makes calculating a mortgage penalty a bit trickier. As a mortgage professional, I ensure that I weigh the best options for my clients. Is it better to refinance and pay a penalty or perform a second mortgage? Here's a scenario to help better explain the difference between the two, as well as outline the potential benefits of a second. Let's take a look at a $400,000 mortgage held against a home that is valued at $750,000 with an interest rate of 2.5%. Now you are looking at accessing $100,000 in equity. Option one is to refinance an existing mortgage plus the new $100,000 for one new mortgage of $500,000. Keep in mind that you'll be losing the 2.5% interest rate, paying a mortgage penalty, and the new mortgage would be at roughly a rate of 5.24%. Your new mortgage balance would be $500,000 at an interest rate of 5.24%, which when using a standard 25-year amortization, which would give you a payment of $2,976. Now, if you were to keep the first mortgage in place and instead adding a second mortgage for $100,000 at roughly 9% interest, you would maintain your $400,000 mortgage at 2.5% and have an additional monthly payment for the $100,000 equaling $827. Combining the two payments would be approximately $350 less and end up saving you a total of $21,000 in interest at the maturity of your term. Speaking of maturity, this would lead to my next point: matching up mortgage maturities. When someone is getting a second mortgage, we aim to align mortgage maturity dates whenever possible, which will make it easier and more cost-effective when combining the two mortgages at a later date. Here are a couple of reasons why you might need a second mortgage: consolidating higher interest rate debts, renovations, paying out consumer proposals, accessing equity to use funds for investments, for example, real estate. If you have a low rate mortgage and want to learn how you can leave it in place, all the while accessing the equity in your house, please give my office a call at 519-250-4848, and either myself or one of my mortgage advisors will be happy to help. Thanks again for watching, and I hope you have a wonderful day.